Hello folks, welcome back to another session. In this learning session, I will explain what is order blocks. One of the most asked questions in trading is, are the order blocks worth to trade? Yes, definitely. They are one of the most discussed topics in trading, and they not only promise you profits, but actually the order blocks hand over you profits. So before starting the session, I will want to give the credit to the guy who introduced order blocks in trading. The order blocks were first introduced by Michael Huddleston, the guy who is the inventor of ICT, Inner Circle Trading. So the ICT guy, Michael Huddleston, started trading journey in 1992. So till now he is having 32 years in the market and one of the best mentor out there. He has not only introduced order blocks and ICT, but he has also introduced some of the very powerful techniques, smart money techniques, smart money concepts. So let's start the session. What are the order blocks and how to trade them? Let me first remove the noise on my chart to be clear. So guys, order blocks are the positions are the pending orders of the big players such as the banks, the institutes, the hedge funds, which they have set for later entry. And order blocks are candles where market makers, the banks, the hedge funds, the institutes have placed their positions. Generally, the market returns to those candles and they are never violated, and if they get violated, so that are never a real order block. So we are having two types of order blocks. The first one is bearish order block, which is there, and I will explain how to trade the bearish order block, how to trade the bullish order block, where to place your stop losses, where to place your profit targets. So this here is a bearish order block, which you can see the market touched and changed its direction to the downside. So this was a bearish order block. So now let me explain what is a bearish order block. The bearish order block is that last bullish candle before the bearish movement that break the market structure lower. So it represents a high possibility of holding the price when the price returns to it. So let me clear it again to make you better understand the order blocks. So let me repeat, what is a bearish order block? The bearish order block is that last bullish candle before the bearish movement. Like here we can see, it is the last bullish candle before the bearish movement that breaks the market structure lower. We can see this last bullish candle broke the market structure to the downside. How we know it broke the structure? Because we can see it was a low. Let me remove it. We can see it was a clear low at this point, and once the market formed that last bullish candle earlier to the bearish movement, it turned the market to the downside. We can see it broke the previous low. So we can see whenever the market will approach this candle, the last bullish candle, the bearish moment, we will identify it as an order block. So how to draw this order block? We will draw the bearish order block, the bearish order block. So we will draw it from the lower part, which is the open of the candle, to its high, and we will drag it to the right side. Once the market approach this area, this order block, we will open a trade instantly, and we will place stop loss above this order block. Not We will not place the stop loss just 2-3 pip above, but we will try to give the trade a little breathe. So we will place the stop loss above 15 or 20 pips, like at this area, because most of the time the market go 2-3 pips above the order block and then change its direction to the downside. It is one of the most recent chart of USD JPY. So we saw what happened at this point. The market approached it, and the market touched the order block, hit the pending orders, and changed its direction to the downside. So once again we can see it is the last bullish candle before the bearish movement. So we can say it is also an order block, and it turned the market structure lower. It broke the previous lows, and then again the market approached this area. The market touched the order block, it approached this order block, and we will place our stop loss, because here we will never think in a way that yes, the market will 100% give us profit. We will think in probabilities, and if we think in probabilities, it is most likely that this area, this order block will be respected, and the market is likely to turn to the downside. So now let's come towards the second part and second type of order blocks, which is bullish order block. What is bullish order block? The bullish order block is the last bearish candle before the bullish movement that break the market structure higher. So it represents a higher possibility of holding the price when the price returns to that area or that candle. Let me give you an example here. We can see this is the point, this is the low the market made, and this candle was the last bearish candle before the bullish movement. At this point, this was the high of the market, not a key high, a recent high, and the market broke the structure to the upside, like at this point we can see. So what this last bearish candle did before the bullish movement, this candle appeared and it pushed the market and it broke the previous high. So once the market returned to this area, to this order block, you can see it respected this order block and the market went to the upside. So at this point, we should have placed our stop loss below the order block, and we should have targeted the next order block, which is this area, too. So it was easily 1:4 risk to reward ratio trade for us. So now let me remove it to show you how to draw the order blocks, the bullish order blocks. In an uptrend. So what we will do, we can drag the complete candle, or we can drag, let's say, the candle from where it opened. These are the two types of methods, the two techniques to draw order blocks. Either we will drag the full candle to the right side, or we will drag it from the area where the candle opened, but then we will make sure we also drag the lowest point with it, which is this area, the low of the another bearish candle. So then it will also get included in the order block. So this is how we gonna draw the bullish order blocks. And now let me show you the bearish order block example in this chart too. We can see the last bullish candle before the bearish movement. I drag the full candle to the right. I made it a zone, and we can see the market didn't touch the zone for a long time, and once the market touched the zone at this point, and again the zone was powerful enough to hold the market from further moving to the upside. Here we should have placed our stop loss above the order block, about 10 or 12 pips above the order block, and we should have targeted a 1:2, 1:3 trade. Like here we can see the market turn to the downside. And again, here is another example of bullish order blocks at this point too. This candle, the last bearish candle before the bullish movement, before the bullish move, is the order block for the buy setups. And we can see the market came down to this order block, touched this order block, and went to the upside. Can see it. And now again let me show you another example of bearish order blocks. The last bullish candle before the bearish movement, which pushed the market to the downside, and that breaks the market structure lower. So this candle broke the market structure lower, so it was clearly an order block. We should have placed our stop loss above 10 or 12 pips above this order block, and we can clearly see what happened once the market approached and touched that order block. So in the end, I will give a tip to the viewers, to the traders who watch the video till the end, that don't try to trade these order blocks in consolidating market, in ranging market. Rather, try to trade these order blocks in trending markets. Let's say trade the bearish order blocks in a down movement, in a downtrend, and trade the bullish order blocks in a bullish trend. Take care. See you in another video.